Right, check futures. I see some red, I'm afraid. Down 140 on the Dow, 70 down on the Nasdaq. Eddie Ghabour is back. Well, it's a momentous occasion here, Eddie. You said last week that you'd finally started buying again. I think you were into healthcare stocks. That was last week. Are you selling them today?
We bought healthcare and utilities last week. We actually sold a third of what we bought yesterday, but we took it all from utilities. We kept the healthcare position on. Utilities have higher sensitivity to interest rates, and with us thinking the 10-year is going to continue to be very volatile, we felt it was most prudent to take it from the utility sector. And look, I shared with you at the end of last year, it was probably controversial at the time, that buy and hold was going to be a losing strategy for 2022. And I continue to pound the table on that. I think the only way you're going to survive this bear market over the next 6 months especially is going to be being very active, getting in and out of position. So if you make 3 to 5% on a position in a week or two, I wouldn't be greedy. I would take some off the table, but just keep a good, strong cash position, especially if you're concerned with volatility in your portfolio.
Just to bring everybody up to speed with what Eddie Ghabour has been saying this past year, you say we've not yet hit a bottom. And I believe you're still saying that. We've not hit the bottom yet. And I believe you're looking toward the first quarter of next year to actually hit bottom. Is that accurate?
I do. I think it'll be sometime in the first 6 months of next year. We really haven't had that huge capitulation moment yet. And I have to tell you, like when you look at bear markets, it's always that last leg down that's the most painful. And we haven't seen it yet. I think you're going to see that in the first half of next year. By the end of first quarter, we'll probably become extremely bullish on certain positioning. We're already making our list of things that we want to get into. But look, when you look at the bond market, as long as interest rates and the dollar stay strong, it's going to be very problematic. And again, the other thing is people are expecting this big bear bounce. I don't think this bear bounce is going to have as much juice as the ones in the past. So that's why you got to be active because, again, the trend is going to be downward, unfortunately. And I want to point to this, too, and I don't think this has ever happened in a bear market at this phase. Long-term treasuries have lost over a third of their value. They've underperformed high-yield debt. Something's got to give there, and I think you're going to start to see that be the next thing that cracks is the high-yield debt market, and that's going to cause equities, because of their correlation, to really spiral downwards over the next 6 months. But it's never a straight line down.
Yep. Look at the 10-year yield, 4.11% this morning. Eddie, thanks for being with us. We'll see you again real soon.